Hi, welcome to the IB Club webinar on debt capital market careers. Now let us take a deep dive into what kind of career paths are available in NBFC sector with debt capital markets as a knowledge. These roles, right, are niche, doesn't come in any placement reports, and doesn't have great advertisements outside. Doesn't need a fancy degree like a CFA or a CA or a CPA. Trust me, I'm an MBA finance, and you have seen in what way I have grown in my career. Now let's start with the first career path among the seven career paths in NBFC. So here is the career path, which is NBFC Treasury Professional. So when I say NBFC Treasury Professional, the person in this role will actively manage the money the NBFC is holding. Let me repeat. So the NBFC is a company where the money goes out to the customers, comes in from the bank. Correct? So at any given point of the time, NBFCs usually carry a huge liquidity. When I say liquidity, it is cash and bank balances. So this treasury professional will be responsible to check what is the position of cash today morning, how much is the requirement for the business team to disburse to the customers. At the same time, whatever we borrowed has to be repaid, right? So, how much is the repayment to the banks from whom we brought the money? Net, what is the surplus we are carrying, and where should I invest that surplus? Broadly, this is what he does. When you say invest the surplus, typically NBFCs invest in treasury bonds, bank fixed deposits, mutual funds, and rarely into listed debentures. Broadly, these are the instruments which this professional will manage. So every NBFC has a income requirement, starting from FDs, which give you like 3 to 6%. Mutual funds will give you 5 to 7%. Debentures will give you slightly higher, like 11 to 13%. So at the same time, banks is most safe, mutual fund is moderately safe, debenture is risky. So this professional has to have the complete market knowledge, where to invest, what to invest, how much rate can we expect. At the same time, plan the outflows. Down the line, 1 week later, if he has to give money, higher amount of money to the business team, to the lenders to repay. So he need to time it accordingly that money will come back by that time. Like planning in the sense, should I park the money in a fixed deposit, say for 7 days time, or 15 days time, or 30 days time? Because the longer the tenure, the higher the interest rate. So this is the treasury professional who works in an NBFC, and this is required by every NBFC in the country. Okay, let me repeat, this role of an NBFC treasury professional is required by every NBFC in the country, because this role is currently in most NBFCs is done by accountants, junior staff, people like that. So actual professional who has this knowledge of market and how to manage the cash, how to manage the inflows and outflows, how to manage the liquidity, where to invest, what to invest, and by investing, in fact, this idle cash is earning some interest by 5 to 7%, right? That will be your contribution to the company's profit and loss account. You are adding income to the company, which means you are an income center. So that is the weight this professional carry. So the larger the company, the larger the liquidity. Say for example, company with say 2000 crore loan book typically carries anything between 100 to 200 crore of cash, which is roughly 10%. Just imagine a company like Bajaj Finance with 1 lakh 50,000 crores. I'm sorry, some 4 lakh 50,000 crores AUM. How much liquidity they will carry? Company like, say, something like Muthoot Housing. which is around 5,000 crore size. How much they will carry? Companies like Ujjivan, companies like Poonawalla, companies like Manappuram, Ashirwad, several NBFCs, how much liquidity they carry and what kind of professionals are available there to manage this. So this is one role which is there in every NBFC in the country. Trust me, these roles are in high demand. So broadly, you are seeing here what does the person do in a typical working day, which is given here. Now let's move to the career path number 2. Hope there are no questions. This is very simple role. I have explained it, but any questions, I will take it in the end. Let's move on. Career path number 2 of 7. This is debt capital markets and fundraising professional. This is what I was harping about since the beginning. This is the person who is irreplaceable. Again, this role is also required for all NBFCs because he is the guy who raise money from the market. So say for example, the company want to give loans to the customers up to the tune of 2000 crore in this year. Okay. For a 2000 crore disbursement during this year, there will be a plan at the beginning of the year that 2000 crore loan requires, for example, 1800 to 1700 crores of debt to be raised from the market. Okay. This 1700 crore, how are you going to raise? How much are you bringing from banks? At what rate? How much are you bringing to the capital markets by issuing NCDs? How much are you bringing in by raising money through external commercial borrowings from global markets? How much are you bringing in by selling your loan assets to banks and other NBFCs through securitization? So this planning will be done by this guy, the fundraising professional. He will allocate, yes, from banks, I will raise 20% of the money at say 10% of the interest rate. Global markets will be slightly costlier, so I will raise only like 10% of the annual requirement from them, and I will pay say 12%. I will issue NCDs to retail investors up to say some 500 crore during the year. So this planning of fundraising program of the year is something which this guy does, and this guy is the face of the company. All your lenders will be in touch with you, all your investors will ask reports from you. You will be presenting the company's performance on a quarterly basis to all the lenders. You will be joining the calls with the lenders in case of any explanation required, in case of any key activity, important activity is done, key decision making is done. If the company is going for IPO, equity raise, if the company is going for M&A, if the company is going for any kind of core business change, rolling out some new product, entering to some new geography, anything and everything, this guy will be knowing. He is the one who has complete knowledge about the company's steps and next steps and future. So he is the person who is highly demand and irreplaceable. Okay. I hope I am able to explain the importance. Just to see the math, so he will identify the funds until he will take care of the disbursement. Disbursement from the bank to the company. Okay. He will draw the money through disbursement by the bank, and he will increase the liquidity in the company. The third career path of seventh one is securitization specialist. Here, this is very interesting role. Please pay full attention on this career path. Okay, this is very niche. It is not just like a normal finance role. This is exactly extremely niche role. So please pay full attention. First of all, let's understand what is securitization, and then you will understand what is securitization specialist. Securitization means an NBFC, say it has crores of loans given to the customers, right? So customers will pay EMI on a monthly basis. Let us assume a loan's worth 100 crore rupees given to a set of customers. Let us imagine 100 crore worth of loans given to a set of customers, which is giving us 1 crore to 2 crore of EMI every month. Clear? This 100 crore is giving us 1 to 2 crore EMI, and that will come over the next, say, 36 months tenure, or say 60 months tenure, or 24 months tenure, depending on the product, personal loan, gold loan, housing loan, like that. Okay. So this 100 crore, which the NBFC will collect over the next few years, will be sold to a bank or another entity as a package. I repeat, this 100 crore, which we are going to receive in future, like the next 36 months, 48 months, will be upfront sold to a bank or an other NBFC as a package. So what is happening is you are selling your future receivables upfront today to another entity, and they will buy this 100 crore and give NBFC, the seller NBFC, 100 crore. Clear? So this 100 crore is sold. So from next month onwards, whatever EMI the NBFC is collecting, this NBFC will pass on that collected EMI to the buyer of the pool. We call this 100 crore as a pool. So this pool of loans will be sold today, and the future EMIs will be transferred on a every monthly basis to the buyer. So what are we doing here? One, we are selling our existing loans. Two, why is he buying these existing loans? Two reasons. One, if he has to give a term loan, it all depends on your company's performance, your company's promoters, shareholders, and your company's profit and loss. But if he is buying a loan, existing loan book, where the 100 crore worth of customers have already been paying you from last 12 months or 24 months, already have been paying you every month on 5th of every month, the EMI is debited, EMI is collected, then he has the assurance that rather than lending to a company based on the company's fundamentals, I rather buy this pool and fund the company, whereas these underlying borrowers of the company have been paying really well. So that is an assurance for that buyer that the pool of customers have been paying really good over the past 1-2 years. Naturally, they will continue to pay because the assurance of the past track record of these customers' behavior is the assurance basis which that guy is buying this pool. What is your role here? One, you have to be very sure about the selection of this pool. This pool, what you are selling, will be the creamy pool of your company, which means they are very good in payments, they are regularly paying you, they have a very good CIBIL score, very good track record. If it is a secured loan company, for example, you have a very good collateral value behind these loans, etc., etc. So loan pool, and this loan will be transferred to a trustee, and this pool will be rated by a rating agency, and all these rating agencies will give a rating to the pool based on the past performance. And dealing with that rating agency is one of the important role this specialist will do. And this pool, when you sell, it is structured in a way that any future loss which comes out of this pool will be taken care by the buyer himself. That is called structuring. And at the end, once the structuring is done, this pool of loans are sold and you will get the money. Here, what kind of an opportunities do you expect? Is one, there are many entities like banks, small finance banks, other large NBFCs who do this securitization buyout on day in, day out basis. There are several NBFCs in India who do securitization as a selling side. So you have opportunities on sell side as an NBFC and also a buy side as a bank or a larger NBFC. Why do they do this? Why do NBFCs need to sell when they are able to take loans in term loans? I'll tell you why. Because securitization transaction is something which happens very quickly. If the NBFC is in need of money today, say over the next 7 to 10 days, it needs money, securitization is the only route. Securitization transaction closes within 10 to 15 days, whereas bank term loan takes 3 to 6 months. And any other transaction, when an NBFC needs money, it takes 3 months to 9 months time. Securitization is the only and only unique route to raise money within 15 days time. So that is the reason very large NBFCs do the securitization almost every month, and main importantly, they do in the quarter ends without any fail. Because quarter ends usually, because of the financial results and financial performance, the companies need more money. So to meet their debt requirement, the treasury professionals and these fundraising professionals raise money through securitization. And the opportunities are both sides, as I told you, in NBFCs, HFCs, SFBs, everywhere, plus on the buy side also. Hope hope I am clear about this. This is very interesting role, and everybody should make note of it. So now we are on career path number 4 of 7. Let's try to understand this. This is called debt syndication leader and lender relationships. So what happens is, as we understood so far, NBFCs raise money, and who raises money is called fundraising professional, and who manages that money is called treasury professional, and who raises money only through selling of loan book is called securitization professional. Now the fourth one is the person who is not in the NBFC at all. So because this sector is so huge, we have some people who help NBFCs raise money. For example, we have NBFC, we have a bank. So all NBFCs in the country doesn't have contacts in all the banks. At the same time, all banks in the country don't know all NBFCs. That is where this syndication roles come into play. So these are the people who track the NBFC's performance, who understand the company, who understand NBFC business model, etc., and know the banks in the country, and they try to raise money to these NBFCs from these banks. Okay? Understand? So these are the agents in the form of individuals and also in the form of companies who arrange money for the NBFCs, because NBFCs are the entities where they need money every month. So naturally, it is a perpetual business for these agents to arrange money to their customers. So they go to the customer, understand them, try to see which banks or which lenders are not lending to them as of now, target those banks, go to those banks, try to introduce them to these NBFCs, explain their business model, and make a match between them. So the day the bank gives funding to this NBFC, this entity, the debt syndication company, will get a commission, will get some income. Typically that ranges between 0.5% to 2%, depending on the complexity of the transaction, depending on the size of the NBFC, depending on the modus operandi, structuring, etc. Now imagine you are working in a company like, say for example, IndusInd Bank Securities, Kotak Securities, SBI Capital, Edelweiss, Nuvama, Centrum, AK Capital, Northern Capital, Vibhriti Capital. All these are companies who do this business as a syndication. So these companies have employees who work on both sides. NBFC side they call as business team, lender side they call as capital markets team. Okay, so the business team is continuous search of NBFCs. So you have a role there where you will be working for a company like say Northern Capital. You will be keep on looking for NBFCs as a your client. On the other side, there are a capital markets team who always stay in touch with banks and lenders. So once the business team person brings in a new company, XYZ Finance Limited, so the capital markets team's job is to find out a suitable lender. So this way, all these syndication companies have huge teams who continuously find NBFCs and lenders to raise money on their behalf. Okay. 3. The most important part here is people who work in these companies for say 5 years, 10 years time eventually have a lot of NBFCs connections and also have a lot of lender connections. They come out and set up their own syndication desk. Okay, so this is the role which has a very good entrepreneurial pros- prospects in the future. So the people who are interested to launch their own business can take this role, work in a company for 5, 6, 7, 8 years, build their own network and start their own syndication desk. Once you launch your syndication desk, assume you do 5 deals a year or 10 deals a year. Averagely deal minimum size is like 10 crore rupees. So if you do even 10 deals a year, full year I am saying, so 100 crore may, if you raise even 1% or 0.75% fee averagely, ranging between 0.5 to 0.3, you are making 75 lakh. This is as simple as it is. That is why lot of NBFC senior management exit from their role, from a day-to-day role, and start their debt syndication desk, just to see how well they can make money, how much money they can make. So here we are on the fifth career path out of 7, and this one is the critical one. Please focus here. For example, this is a role where a credit rating agency management is the key job of the person. So NBFCs are very sensitive. They are regulated by Reserve Bank of India, the RBI. They are regulated by SEBI, wherever there is a capital market instrument. So RBI, SEBI watch NBFCs very closely. In addition, all the banks in the country fund NBFCs. Okay, that is one more important thing. So banks as a lender, SEBI as a regulator, RBI as a regulator always watch NBFCs, and NBFCs have to ensure their credit rating is always and always monitored and is at a positive note. So what is credit rating? Most of you must be already knowing that credit rating is given by companies like CRISIL, ICRA, CARE and Equity, where they assess the company, analyze the company balance sheet, financials, and they award a rating starting from B to A category. So the higher the rating, the cheaper the cost of funds. So every NBFC try to upgrade their rating so that they can access cheaper loans from banks. So when there is any credit rating surveillance, which means the credit rating actually happens every year. So for example, if the company has gone to the rating agency for a credit rating with March numbers. So with March numbers, the rating agency will analyze and give one rating. Let us assume the rating they gave is A minus. So the company will again go to the rating agency 1 year later. So next year again with March numbers. That is called surveillance. Okay. First time is called rating. From second time, third time, every year when they go, it is called surveillance. That does not mean this person will have only annually only the work. Okay. Every quarter or every month, whenever there is a key event in the company, whenever there are financials prepared, every month and every quarter, he has to update the rating agency, and rating agency will keep track of the progress of the company's growth. Whenever a rating agency issues a rating rationale, they give key sensitive points in that rating rationale. They talk about sensitivity factors. So the sensitivity factors are something the rating agency will keep watching going forward. Any change in those key sensitivity factors will result in upgrade or downgrade of the rating of the company. Simple. So for example, a company has just now came out of some crisis, say COVID crisis. The rating agency will say the ability of the company to raise money will be a key monitoring factor, or the ability of the company to maintain profit is a key monitoring factor. The ability of a company to raise equity is a key monitoring factor, like this. So in the next surveillance, the rating agency will watch whether the company has achieved these A, B, C things or not. And it is important for this person to analyze present and represent the key notes or key achievements of the company to the rating agency in a beautiful way, in a convincing way, so that the rating agency, when they take up the surveillance, will be ready with several times, with several times this rating professional has given them the data. The CRISIL company will be ready to understand it in a better way. That is the role. So this professional, the rating agency or the credit and rating professional, is a person who will help the company to grow and who will ensure the company's rating is protected, and the rating agency reads the numbers in a way where the company wants them to read. Understand? So things like data analysis, financial analysis, updation of key events in the company, all those things this person will be doing. So where do you have the role? All NBFCs, even large NBFCs like Bajaj, Muthoot and all have a separate credit rating desk, a team of people who actually manage the rating agencies and the relationship with them. This is very sensitive and one of the most demanding role. Once you graduate from this role, after few years of experience, you can actually crack roles inside a rating agency as well, because you are looking at the same data on the seller side, the NBFC side, and the same analysis which you have created over years will be useful. That knowledge will be useful on the rating agency side as well. Finally, now we are on the career path number 6 of 7. This is very interesting one, and people who are very much interested in things like analysis, okay, and things like budgeting or things like analytical thinking are the best fit for this role, okay. And this role is abundantly available, and the beauty of this role is you will have access to the senior management, the founders, the board of directors of the company. Let me explain. Corporate finance and financial analysis are the team who are like a minister to the king. If you assume your CEO or MD as a king, the corporate finance team is the minister. What they do financial analysis, peer comparison. Peer comparison means same industry, same company, how others are performing with the same product. Assume you are a vehicle finance company, an NBFC. So there are many vehicle finance companies who are listed, whose data is available on the public domain. So as a company, when you are doing vehicle finance, what good you are doing or what good they are doing, how can you achieve that numbers and that profitability, those trend analysis, peer comparison, all those things you will be doing. You will be projecting the company's financials into the next 3 years, 5 years into the future by building best practices from the industry, which you learn from your peer comparison knowledge. And also you will be projecting things like what happens if you roll out a new product, what happens if you reduce a 1% of interest to your customers, will your customers increase, will you be able to disburse more, what happens if your cost of funds reduces by a percent. Like that you will be building different scenarios so that your future planning is ready, and you will be like a right hand or an advisor to the board of directors. This is where skills like financial projections, preparing beautiful corporate decks, presentations will be required. With those skills, you will be able to present to the board, present to the committees in your company, so that they will buy in or give you some ideas to improve your plan. So finally, you are the person who bring the raw material on the table. With negotiations, discussions with your board, with the knowledge of the board, you will be able to refine it and implement it. So naturally you are one of the person who has been working on that, who is already mingled with the senior management. So naturally your mind is very important to stay in the company, because if your thought process, your direction is towards one side of the company's growth, if you resign and somebody else takes your role, naturally the other person will not think like you. So after working for 3-4 years in one company, as a corporate finance analyst or this role, naturally you will become the most wanted person and go-to person in the company. And anybody who is thinking this role is temporary and all, never happens, because this is one of the role which has access to the shareholders and directors of the company. And who will give you the employment is something like every NBFC, right? Every NBFC want to grow, every NBFC want to make profits, every NBFC want to have a separate setup of corporate finance team so that they can grow. So that's as simple as it goes. So this role is also highly demanding, and you don't need any additional qualifications like a CFA or anything like that. Not just for this, all the career path which I am discussing today doesn't need a external career path or external qualification